So you have student loans. Let's talk about how to manage it. So first of all, you want to understand your loan before we move on. If this is helpful, drop a like and make sure you're subscribed. So there are different types of student loans. There are subsidized loans, unsubsidized loans, and then there are private loans. The subsidized and unsubsidized loans. The government is going to determine your interest rate. With private loans, it's going to be a little bit higher. And so the way that they calculate that is based off of your credit history. If you have a cosigner, they'll use their credit history to determine what your interest rate is going to be. Then you want to look at your loan terms. So how long did you borrow the money for? Was it 10 years, 20 years, 30 years? This is going to make a big difference because it's going to determine how much money you're repaying back over the life of the loan. And then finally, you want to look at your repayment options. So with the federal loans, you have several different options. You have the standard 10-year repayment plan. Then you have the extended repayment plan, where they going to look at your income and they going to extend it out to 25 years if they need to. Then there's an encompassed repayment plan. So this one's great because it's going to be based off of your income. If you have a low income, then your payment is going to be very low. And then if you have a high income, it's going to be a little bit more. So after you figure out which loan that you are going to pay off first and you understand your loan, you want to start making a plan. So you want to take a look at your budget and figure out how much money can you allocate towards your student loans. And if you can allocate more money than your minimum payment, then congratulations, you get to pay off your loan faster and you get to save on interest. If you have an adjustable rate loan, you want to make sure that you understand when is that adjustment period and how often is it adjusted. So with these types of loans, typically they're going to start out really low and then after a period of time, they're going to adjust it and it's going to go up. And then finally, you want to make sure that you have an emergency fund. So when life happens and you lose your job, and if you enjoyed this video, make sure you follow for more content. Or something comes up and you need to take time off to deal with that emergency. You don't have to use your student loan to pay for it. I hope this helps. You got this?